Hello and welcome to Mindful Money TV. I'm John Lappin, editor of Mindful Money, and today I'm talking to Edmund Shing of BCS Asset Management about the investment themes he sees as important in 2014. So Edmund, tell me about the themes for 2014 then.
Well, John, I think there are several quite crucial themes. I think if we think about technology, the Internet of Things, that's one key theme. I think a second theme also revolves around energy, both talking about renewable energy and also shale oil and gas. So on the technology side, the Internet of Things, this is something that people have talked about a lot. It's actually a phrase popularized by Cisco, the CEO there, John Chambers, talking about how everything is becoming connected. You know, we have an explosion of tablets, smartphones, as well as computers, and now we're moving on to smart TVs. You know, we may move to the smart fridge, the smart thermostat. Of course, Google made a recent acquisition of a company called Nest, which is about controlling intelligent thermostats in a home. So we're moving that way, and I think that therefore the internet theme becomes all pervasive. And I don't just mean companies like Amazon, social media companies like Facebook, but I'm talking more about the plumbing, the infrastructure, companies such as Juniper Networks or Cisco itself, for instance, or even Corning, you know, the guys that lay the fiber optic cables and make those fiber optic cables, because you're going to need a lot more capacity if we're going to have everything connected up to the internet.
And how does that play out in terms of sectors as well then?
Well, in terms of sectors, clearly the technology sector, and in particular the hardware sector. So I'm focusing, as I said, on hardware companies like within internet connectivity, Juniper, because they make a lot of switches, for instance, for the internet, and you know, these sort of the very intelligent plumbing. Corning make the cables that you need to lay. Companies like Qualcomm make the chips that go inside smartphones and tablets, you know, that act as the brain of these interconnected devices. So those are the sort of hardware companies I like, and ways you can play them. Obviously you can buy, these are US stocks you can buy directly if you have a US account. If you don't, however, there are of course a number of other ways with UK listed funds. ETFs are one. There is of course the EQQQ, which is the NASDAQ 100 listed ETF, which you can buy in pounds in the UK. Or there is actually an interesting company called the Herald Investment Trust, which actually specialises in technology companies and is a UK investment trust, currently trading at about a 13% discount to net asset value. So it's a way of buying a pound's worth of assets for 87 pence today.
Okay, and so this isn't the cloud, so you're discussing hardware companies, not like a lot of technology managers we talk to are very big on the cloud. This isn't quite what you're saying then?
It's another aspect, because I think the problem with the cloud is a lot of people have talked about it, and it's become a very big theme, and any company that is connected to the cloud have seen valuations rise rapidly, just as social media, just as, for instance, companies like Amazon. The valuations have really risen very quickly. And yes, there are one or two UK companies that are interesting, like IOMart in the UK, which I think are probably worth playing and are reasonably valued for what the growth they offer. However, I do think that some of the behemoths in the US will be the big winners. And aside from the hardware companies, I'm also talking about the likes of Apple, for instance. Apple, you know, they sell the iPhone, the iPad, the iPod, the MacBooks. They'll be no doubt expanding to other areas such as maybe smart TVs. And they clearly, the whole Apple ecosystem clearly is also dedicated to some degree towards the Internet of Things.
Okay, so just on a final or a point on Apple. So aren't they already too big and in the lead, and everyone's sort of hurling brickbats at them, and they, you know, share price has been up and down as well?
Yeah, no, you're absolutely right. It has been up as high as $700, then it crashed back down to 400, and now it's sort of 500 and something, so it's somewhere in between. But Apple, whatever we say about the lack of Steve Jobs, clearly, you know, the great leader has departed. That being said, this is a company that is a behemoth. It dominates its space. It has a tradition of destroying its competitors. Look, where is Nokia? Where is BlackBerry today? The iPhone came and destroyed the entire competitive environment, particularly at the high end of smartphones. And they've done that again with tablets. They've created a market that didn't exist. So I think that they can continue to do that sort of, I suppose, command and conquer operation. And you're only paying, if you strip out the cash, 9 times forward PE, which is an extremely low valuation, and you even get a good dividend yield to boot.
So if I'm a share investor, or if I'm someone who might not have too many shares, I might have a few, but generally I'm a fund investor. That's how I go about things. So what's your view about where I should go to play these themes, to play these sectors we've been talking about?
Well, as I said, the NASDAQ 100 ETF is a very easy way, because you get a good broad collection of US technology companies. If you want to think about other themes, for instance, shale oil and shale gas, then clearly you can plot oil-related funds, but you have to be careful. I think the one area that will do very well, again, with this whole shale oil and shale gas explosion, we've been hearing a lot about it in the UK, is actually through oil services. In other words, the people giving the spades rather than the people doing the exploration, because the exploration can be very hit and miss. You may find a lot of oil and gas, you may find nothing. You might hit a dry well. Whereas if you're the oil service company, you are providing the rigs, you're providing the equipment, you're providing the technology know-how that every company will need to try to firstly dig for shale oil and gas, and then, if they find some, to then produce it and refine it. And so there are oil service ETFs, particularly in the US, which I think are very attractive right now.
And finally, you have a book coming out this year. Tell me a little bit about the book.
Well, the book, it's coming out, edited by Harriman House, so that'll be published within the next, I hope, 2 to 3 months. The title is The Idle Investor, and the idea is very simple. It is to give the average retail investor a structure, a way to invest. Because I think when you look at the average retail investor, they swim around a little bit in the clouds. They're not quite sure how they should be positioning. They tend to buy late and they tend to sell too early at the first sign of panic because they have no system. So this book offers 3 extremely simple fund-based systems to invest, which require no more, at the very most, than in looking at your investments once per month and making a decision once per month.
Well, we'll have you back hopefully to talk about the book when it's published as well. And thank you very much for speaking to Mindful Money today.
Thank you, John.